Morning, everybody. Yes, it's there. Normally my video, for some reason, doesn't seem to work in the mornings now, but it's working today. That's good. Let me just quickly change my lights. There we go. Otherwise, they'll turn off in 2 hours. Morning, Danny. Morning, Barry. Morning, Evil. Morning, Bill. Morning, Leon. How are we doing? So this morning, we're going to go through usual stuff. We're going to go through the news, going to go through the zones, have a look at the accounts, basically, see how everything's doing. And this morning, I'm going to go through the set files, the old strategies, basically, for position trading, the H1M5 mean reversion, H4M15 mean reversion, ADR reversals. Just going to go through those set files, or some set files, to see how they operate with the new signals, basically, for the position trading EA version 2. So just going to retest those and incorporate the new market reversal alert signal and the 3-bar reversal signal to see basically what happens, because I want to start running those live. The just popping over to the VPS, the I've just changed this morning. We'll go through this in a second, but the ADR, sorry, the RSI, hourly RSI extension strategy that I've been running on this account is just not taking any trades at the moment. The market is, as you can see, flat. It's dead. Trump's had completely the opposite effect to what I was expecting the market to do, which was start to go a little bit wild, start to move fast and aggressively. What's actually happened is it hasn't gone anywhere. We've basically had an awful lot of intraday movement on spikes, but no directional movement of any strength. So we've got no RSI extensions signaling at all. This is just set at the moment onto H1 RSI from 70.30 to 95.5. As you can see, it's dead. And if you've been in the live rooms, which most of you have regularly, we're not seeing many RSI extensions. The 80-20s, which before Christmas were signaling constantly, which is one of the reasons I moved to the hourly time frame as a signal time frame to get less trades, is just not lighting up. So the only thing I can do at the moment is move back to a multi-time frame analysis to get some less strong signals and getting quicker, basically. So we're going to go through that this morning. I've already set this account up. I'm going to test. I've set it live anyway, but I'm going to test the set file that I'm using just to do some back testing to verify how aggressive it is, because I've also upped the aggression a little bit. I've gone in with 0.25% ADR over half an ADR spacing, because unless something changes, I can't see this market really shifting at the moment. So anyway, so we're going to go through that this morning, but we'll start off having a look at the usual stuff. We are breaking long on the DAX and the FTSE. Flippin' heck. Okay, so the pre-market range on the FTSE is gone. And the DAX, depending on what the pre-market range was. I'm not running SIH today either. So there's a long trade triggered on the DAX there, but we'll have a look at that. Banked another 7% yesterday on the new ORB version 2. Again, still haven't got any further testing done on that, but it's up 67% in a month, which is good. Most of that is in 1 week, though. So, yeah, it's on aggressive mode. But yeah, we'll come back to that. But long break on the indices this morning. As you know, this is the thing. Indices at the moment, struggling. Everything is struggling. Trump's really, really not having the impact I was expecting him to have. It's like he's turned into a loony. But anyway. Morning, Ace. Morning, Mark. Evil. The H1 RSIs are oscillating between 40 and 60. Even the 15-minute RSI is struggling to break 70-30. Yeah. Feels like a month-long bank holiday. It feels like summer trading. It could be the calm before the storm, and that's what worries me, which is why I'm going to do some back testing this morning to just have a look at worst case scenarios, what we could expect when it explodes. It will explode at some point. The problem with all trading is, as you know, because I go on about it all the time, the strategy has to fit the market regime, the market condition. If you've got a market condition like that and you're a trend trader, you don't earn any money. And this is the problem with trading. It's not a job where you can basically earn money on a regular basis. The market pays you when the market pays you. The market pays you depending on the strategy you're using when the market's moving. And you cannot determine what strategy to use because you can't see what's beyond that hard right edge. You don't know what's coming. So I've been running this account for the last, as you can see, 4 weeks. I can't survive on $300. Not possible. So, you know, I've got to change down a gear basically and start accelerating and putting more risk on the market faster. The danger with that is as soon as you accelerate and put more risk on the market faster, if that is when the market decides to go parabolic, you are in on day one of the parabolic move in the wrong direction. That is the problem, which is why I'm very, very reluctant to move my settings and strategies around very often, because I've done it in the past and it's basically equivalent to system hopping. If you have a strategy that you've back tested over years and years and you've traded for years and years and it's successful and you change it, you're changing strategy, you're system hopping. That system is what you were trading. Even if you change from a 70-30 RSI to an 80-20 RSI, you are changing the strategy parameters. It's a completely different strategy. It might still be mean reversion, but the entries are going to be completely different. And everything you've done in the back testing in the past is going to give you totally different results. So it's something I'm not comfortable doing very often, but needs must. Yeah, if your strategy doesn't trade, it doesn't trade. I can't do anything with it. These two trades that we've got on here, on the US dollar Swiss and the pound US dollar, the entry was taken ages ago. Yeah, and you can see we've been in a sell on this thing. It's just not going anywhere. So you know, we're coming back to break even again. You know, this is the thing. We are just going sideways. So it's a case of finding something that's great. And this is why this strategy, you know, is, I mean, God, it's just done another 7% this morning. I only turned this on about 7:30. We've already banked 7%. It's up 140%. Why? Because it's a mean reversion strategy on the 1 minute time frame. What is the day doing every day? Going up and down. What's this thing going to not do? Stop printing money. It will when it goes parabolic. You know, but you can't run this strategy full time. But again, I want to look into this more because there's an edge in this, obviously. I've just shown you the edge. I'm not doing anything complex here. I'm trading up and down 140% in a month. You can't look at that and go, I'm not going to investigate that further. It's done 105% in 5 days. It's nuts. But this is obviously exponential. So this is a compounding strategy. So obviously what we're doing is we're using a 1% risk on a 20K account. As that 20K account grows, we're now using a $400 risk, a $300 risk, a $200 risk. We started with a $100 risk. Of course, it's going to exponentially grow faster. That's what compounding is. At some point, though, it's going to be in dire straits. But anyway, we'll look at that in a bit as well. You're talking exactly about that as well, yeah. Okay. Morning, Mark. If you lower the entry sensitivity to get some more trades, you could offset that by running lower risk in case of a squeeze or increased volatility. You can do, but the trouble with that is if you enter with lower settings. So, for example, if we went from a 70-30 to a 60-40 RSI, you're going to and use lower risk to compensate. It's harder to achieve a target worth achieving. So you can get lots of tiny bits of money out of the market, but it doesn't. I tested all of these methods basically with the market reversal alert EA when I was developing that. Actually, well, I tested it before that manually, but the advantage of using a 60-40 and getting in more often with lower risk doesn't really make any extra profit than getting in with a 70-30 with higher risk, and getting in with an 80-20 with even higher risk. Because what you're doing is you're banking smaller amounts of money more often here. But when you go into a squeeze, all of the strategies will have the same outcome. Yeah. So while the market is doing this, yes, this will bank more often, but it won't bank as much. If you didn't bank this and you waited for those to happen, you would generate roughly the same profit as that, just taking less trades, therefore less risk, less exposure, safer strategy. And the bigger the RSI, the safer you get. The higher the time frame you go, the safer you get. H4 is safer than H1, which is safer than M15, which is way safer than M1. Yeah. So there's not actually much advantage I could find. But you know, you can run these tests yourself and see, but you've got to run them over different times in, you know, the year, over different years to see what the outcome is. Anyway, we'll go over that in a sec. Kind of just done it. Right. So at the moment, on the Zone Trader account, there's nothing much banked. There's nothing banked yesterday. I closed out a trade yesterday just to test the dashboard and fix that bug, which is fixed now. There's nothing banked today. We're still in the same drawdown that we were in on Friday. Nothing's moved. It's going up and down a lot, but it's not banking anything. Pound odd I might get in the bank today. There's no ADRs. There's no weeklies. There's no RSI extensions. Yeah, this is partly why I'm doing what I'm doing today, because we are struggling to find opportunities at the minute. So if you look through all the pairs, probably better to look on a 4-hour chart at the moment. This is roughly 2 months worth of price action here. We're going back to sort of end of November. As you can see, there's not a lot happening at all. We are very, very sideways. We're pretty much priced where we were back here a couple of months ago with a lot of stuff. Swissie's in the same place. Yen's not really going anywhere. It's strong at the moment, fairly strong, but not massively. Aussie, New Zealand, totally sideways. Aussie, US, totally sideways. Yeah, I mean, it's just, this is the story at the moment. Everything is completely sideways. There have been opportunities, but they haven't been taken because I've been using the hourly time frame. This is the 4-hour, obviously, but because I've been using the hourly time frame, by the time you're getting these signals, they're gone, and they are playing out. So the old strategies need to be revisited, and now we've got stronger signals we can use, all the better. So as you can see, yeah, I mean, it's just totally sideways. Yeah, this is where we were back in beginning of December. And this is where we are now. We've been up here and we've been down there. We're not going anywhere with anything. Even looking at the US dollar, back to where it was back in November. You know, it's just bizarre. And the US dollar CAD kind of speaks volumes, doesn't it? Tariffs. And again, last night, tariffs. So again, Trump, we'll go for the news in a sec, but Trump said yesterday, we're bringing those tariffs in on Canada. Something's changed. He's obviously changed his mind, decided now he wants to do the tariffs again. So US dollar CAD last night, over the last 24 hours, has spiked right up. It's just bizarre. But anyway, we got to adjust to market conditions. And when market conditions go back to being crazy again, we will obviously readjust. But until then, we'll just have to see what happens. So news today, it's a bank holiday. Sorry, it's bank holiday yesterday. Didn't really get any movement on the yen. I was hoping something might move off the yen. We had Trump speaking last night. He speaks every day. It's nothing new. Today's news is nothing. We've got the S&P composite, and we've got consumer confidence for the US. Not expecting any movement off of any of this today. So again, it's another no news day. So not really expecting the market to decide to go anywhere for any reason. 1 minute scalping, probably not a bad place to be at the minute. Tomorrow overnight, we've got the CPI for the Australian dollar. So this is the first big news event of the week. We're expecting an increase on the CPI for the Aussie. So potential bull move for the Australian dollar coming. If we get that, if we get the 2.5, probably won't do anything. And then that's it. No more news. We've got the G20 meetings tomorrow. That's going to be interesting because obviously what's going on in Ukraine. The G20 summit's going to be, I suspect, talking about what the hell to do with Trump. But we'll see. But yeah, it's just a really not light news week this week. Traders had the Fed rate cuts, seeing 53 basis points by end of the year. So 2 rate cuts by end of year. It's a long way to go. Yeah, no reason to sell or buy the US at the moment because there's no interest rates looking to be changed. That kind of tells you the story of the market at the minute, doesn't it? Look at that. Yen, very strong. Everything else, just doing nothing. Just dead. So there's been reversion opportunity on the yen at the minute. We had the GDP this morning for Germany. Didn't really change. Overnight, not an awful lot. This, oh, that's NVIDIA chips. This red news back here was Trump. So this is Trump on Canada and Mexico. We're on time with the tariffs, moving along rapidly. Yeah, tariffs on Canada and Mexico will go forward. So obviously the US spiked against the Canadian dollar. The Canadian dollar dropped against everything yesterday, but still not even really an ADR because you've said this before. Now we don't believe a bloody word that comes out your mouth, Mr. Trump, because you've cried wolf too many times. We don't believe you until you sign the piece of paper. When you sign the piece of paper, the market will move. But until then, they're just fed up with it, aren't they? Obviously, at the moment, it's all about Russia. So the war is going to be over in 2 weeks. And the way it's going to end is the US are going to pull all support for Ukraine, stop supplying weapons. Therefore, they cannot fight. War over. So Trump's way of fixing a war is to basically let one side lose. Yeah, anyway, enough said about that. So there you go. There's your news, forecast, and overnight. Not really a lot happening. Big strong move on the indices this morning. Very, very bullish across the board. So we'll see what happens with those in a bit. Right, so basically there's not really anything to look at here at the moment. I'm going to go through all the zones on the Zone Trader account and readjust. So yesterday I pushed out the update for Zone Trader. So the main functionality changes were we now have this button here to extend the zone straight over to the right. This functionality here of the zone, when you draw it on a support or resistance, every single time a candle closes, it automatically adjusts the zone to the most recent time on the chart anyway. But this is just kind of, we can do it manually as well now. Main use for this, which is what I wanted, was so that I can basically go and draw a zone somewhere and then just quickly look at where it is in relation to the next sell distance. I did adjust the EA so that then the next sell distance was plotted on the chart, which is fine if you've got no other indicators on there. But when you've got other support, resistance, supply, demand, propulsion gaps, and all sorts of things, this kind of gets lost. So it just made more sense to extend the zone. So that's what that does. We've got that button now. Also, the other change is that it now allows you to use risk over ADR and use lot multiplication on monetary risk. Yeah, so before it said here applies to lots only, so it was working off of the lots, but now it will work off of monetary risk as well. So it automatically calculates your lots and then it will multiply. So that's the other main change. And we've also got a little bit of a logic change basically for those that do partial drawdown control so that the line is drawn in the correct place. Right, so going through the zones quickly, I'm going to whiz through them. If nothing's changed, oh, also I fixed the logic for the weekly line. This, for some reason, the logic was wrong and it was drawing it on the Friday, not the Monday. Although I said if day is a Monday, draw a line. I said draw a line at the open, and for some reason it decided it wanted to use Friday, not Monday. So I've fixed it to say midnight and now it works. don't quite know what the difference is between the first bar of today and midnight, but it is. I haven't got a Sunday. So yeah, anyway. But anyway, that's fixed. So I'm just going to quickly whiz through these. If there's no change really so far from yesterday, go and look at yesterday's stream. It's not going to be any different. So there's no point in wasting time on it. Aussie CAD's coming down quite nicely, which is good. Aussie Swiss looking to get in long. So first trade's going to go in on that one today. There we go. So we'll be taking a trade on that shortly. Aussie Swiss long out of support. So this is this area here. We rebought. So looking for a rebuy on that. Aussie New Zealand looking for sells. So I'm looking for it to push up into here. Didn't do anything yesterday, so obviously nothing's happened. Sells on Aussie US. Again, it's basing sideways. I'm looking to get out in support. At the moment, it just want out. Yeah, just get money banked. That's really all we can do at the minute. CAD Swiss, second long taken CAD Swiss. So I need a new entry on that. This is tricky now, isn't it? I'm ignoring this gap down because that's to do with the CAD tariffs. So obviously now Canadian dollar is going to be weak. Now the tariff announcement has come in. When the tariff actually comes in, it's virtually impossible to say what is going to happen to it. So I'm going to assume when the tariff actually hits, if it hits, we're going to get a negative move on the CAD. This area here is the previous support. That announcement of the tariffs and then the actual unannouncement of the tariffs, you can kind of ignore that spike a little bit and ignore that obviously because it wasn't real. So this is kind of where I've identified the support, which is somewhere around about there. Should use my button, shouldn't I? So yeah, that's where I'm going to look at taking another long on that. I've only got 2 on it. It's not the end of the world. Upside target, I'm going to move down. I'm going to go up at these highs at the minute because this is where I would actually identify as probable resistance to the upside. But it's not a lot of money. So right now I'm going to give it the benefit of the doubt that we're going to hold this kind of range, ignoring this, and try and get back up into there. If it triggers that, average will move down and I will move the zone down into that area there. But we'll see what happens, see how many trades we need on it. Euro odd, first short going in today. So I'm going to get in short on Euro odd. Looking for resistance bounce out of here. Euro CAD, have 2 on. So this is a tricky one. This is holding again. Look, it can't get through. Complete indecision. So we got 2 hours of indecision here. Buyers and sellers have got no clue which way to go at the moment. They're not able to get through. There's an iceberg order sitting here, which is this massive propulsion gap. We know that because they've sold it twice now. They just sold it again this morning. They sold it again, and now they're selling it again. It's too close for me to get in with another trade. So I can't take another trade now. As much as I'd love to hit the sell button right now, it's risky. So I'm going to stick with the origin of the move. If we do manage to overpower these sellers, we should find more resistance here at where we actually broke that low. But it's the Canadian dollar. This is happening because they're trying to weaken the dollar because of what's going to happen with these trade tariffs if they happen. But it is only rumor. Again, he hasn't signed anything. So we'll wait and see. This could easily just come straight back down because nothing actually happens with the CAD. So I'm just going to hold it there for the minute. You have got an option if you wanted to. Depends where your averages are, but my next line is here. Even if I put the block, the zone right here, it's not going to take a trade unless the candle closes above this line. I might as well just wait. There's no point in overexposing on it. Euro Swiss, longs on. Next long for me is down at the lows. We haven't got there yet. We tried yesterday, didn't manage to get through this area. So this is holding at the minute. So if that doesn't hold, we're going to come and test these lows. That's where my next entry will be. Exit at the moment is up there. Euro Pound, looking for shorts. Haven't gone anywhere. Euro New Zealand, one short on, second short entry is up in these highs, kind of ignoring this wick a little bit. Bit difficult to find somewhere on this, but that leg here is a 38 retracement. Then we got a weird news spike and it pushed down. So I'm kind of looking at this high really as second entry short. Euro US dollar, shorts on, still waiting for something to happen. Again, sideways, sideways, sideways. Pound odd. That's going to hopefully hit target today. Yeah, so pound odds in a nice, it's only 0.25%, but it's 0.25% at the minute. I'll take what I can get. We are struggling here. Again, this morning we're struggling. I'm going to let it run, try and get some money, basically. I'm tempted to bank that, but it's just a single trade. It's one of those singles I've had on for over a week. Yeah, it's gone, you know, this is the trouble, isn't it? I'm not going anywhere. It's been a week. What I don't want to do is be back down here this week and still bank nothing. I'm struggling at the moment. Pound CAD, longs, trying to get a long on, can't get one. Yeah, we just can't get onto this. So this propulsion gap here, I'll just see if we can get a retest out of that. Just keep dragging it up, but can't get in. It's not pulling back far enough. Pound Swiss, new long on, so I need a new buy. Down at the lows. Break of that high there was retested. That is possibly where we would get more price action coming in on this one. So I'm just going to move the zone up to incorporate kind of this candle here. So this little break here, we had that here, high there. We broke it and retested it. So that's where basically the springboard kind of move up started from. So I'm just going to incorporate that on the chart. Just in case we have got a big buy order sitting in there that just doesn't let it come back down and retest these lows. Pound US dollar, shorts on, it's starting to go the right way, but we haven't gone anywhere yet. New Zealand CAD, looking for long entries. So I've decided basically it's either going to be these highs here or these highs here. I've gone with the further away ones, which would be a 50% retracement. Again, Canadian dollar could go explosive at any moment when Trump says something. Next long is about to go in on New Zealand dollar Swiss. So next long entry coming in at these support. New Zealand dollar US dollar, that's back to break even, waiting for a push down. US dollar CAD is starting to move up finally. We've broken propulsion. So we have actually made it. God, it's really awkward to chart this because of this stupid thing. But yeah, we have broken the high. This propulsion gap here and that propulsion gap are now complete. So this is the area of support that we broke, which we are hitting now. So if we break this high today, it brings us back into the previous balance. From there, it's a case of trying to break out of that high. If we do break that high, these propulsion gaps are target. So I'm looking at the minute, because I've been in this for ages, I'm looking literally just to test this area, previous lows, which are just part of this weird movement, but that moved down, we resold it. That's where I'm looking to get out, and it's not a lot of profit, but I just want out of it because it's been going sideways for weeks. So exit basically with whatever it gives me. US dollar Swiss, looking for next long, didn't really go anywhere yesterday. Pound yen is the only yen pair I've got on. We haven't gone anywhere this week, so that's it. Not a lot. Can't really do anything with it in a minute. It's just flip-flopping. I get the feeling this is going to go into drawdown by 10 or 15% over the next couple of weeks, because there's no directional movement happening. So because we're in accumulation, everything's reset to 50-50. Nothing's bounced at any levels, has it? It's just sort of hovering everywhere. So we'll wait and see what happens with it. But there's the zones done. Let's quickly look at the indices. So we are still breaking long the DAX. FTSE's breaking long. No trades on the FTSE today. We'll see where we go. Bit of a weird market. Yesterday was it was kind of sideways until end of day there with the Dow. FTSE, sorry, the S&P and the Nasdaq both the same. Yesterday was unbelievable, just death for anybody trying to scalp. It was just dead, totally dead. The market just dead. It's just weird at the minute. I keep saying it. I haven't really got a descriptive way of describing what the market is at the minute, but just odd. I haven't experienced this before. It's kind of like you said earlier, whoever it was, about calm before the storm. It feels like something's coming big. Something big is coming. Almost like World War III or something. It's just weird at the minute. This market is, if you look at the fear and greed index, you're not getting the reaction you would normally see. My God, where's the last one? Oh yeah, so that macro. Yeah, we've had a lot of talk, haven't we? There we go. It doesn't feel like this at the minute. It feels like that, but it's not. The market is worried about what's going on everywhere at the moment, and normally in those sorts of times you get mass run for the hills. So you know, this is why this is called neutral. Normally when you have a neutral market, we find balance, we find equilibrium. When you're over here or here or here or here, something is moving up and something is moving down very, very aggressively. This isn't what we're getting at the minute. This is not correlating with market conditions at the moment. So something is off, very off somewhere, and it's a difficult thing to put your finger on. It's a weird thing. If any of you guys, a lot of you have been trading for a while, but it's a difficult thing to explain to newcomers. The feeling, it's like you just get a feeling something is going to happen, and you get a feeling about the market, and it's a weird thing. It's some kind of premonition that's programmed into you by seeing charts for years and years and years, ingrained in your brain. Your brain automatically goes, well, I remember this happened last time. You won't remember it, but I do. And it gives you this feeling about something. I've just got this feeling at the moment. Something's going to explode. And I can't put my finger on it. It's weird. But anyway, and it's because of abnormality. Yeah, you know, go and try and find the US dollar CAD doing this in the past. It just doesn't happen. So something's not right, and it's Trump. Right, so let's have a look at these back tests. So position trader EA version 2. Basically, the main difference we've got, we're going to look at some set files. The main difference we've got obviously now is this one here. Only take new signals once per day. So this is really effective, more of ADR reversal strategy than anything else. The ADR reversal strategy If there was a lot of movement intraday and you were scalping very small amounts of money, you would get in multiple times a day. So this now gives you the ability to change that, which opens up possibilities for more scalping strategies using ADR reversals. And now we've got a stop loss. I think there's a route to sort of investigating stop loss based strategies on ADR. But what I wanted to look at today was the RSI side of things. So let me just get these sets. Just going to move these in. So this one here, February 2025 live H1M5, that is the set file that I've just set live this morning. So what I want to do first of all is run through this set file. So this is basic H1M5 multi-time frame mean reversion. So I've gone with 0.25% risk over 1 ADR. So a little bit more aggressive than I was running previously, which was 0.2. Lot multiplication, leaving that at 1.3 at the moment. That will be obviously the thing that when we go into a squeeze is going to be the main contributing factor to drawdown. So this is something that I may need to adjust a little. We'll have a look at it. Distance between trades, 0.5. At the minute, because we are not moving, it's difficult to get 3/4 of an ADR. We're not getting ADR reversal signals very often, even on news. So asking the market to move 3/4 of an ADR before I take a second position, probably not going to be particularly easy. If I'm targeting 1 ADR of movement before I get out, which is what I am targeting at the moment, which is what I like to target, you're going to find it very difficult to make that if you're spacing your entries 3/4 of an ADR apart, because it's got to move kind of 2 ADR just to get to your target pretty much. So reducing this down for the moment, I just want to see what the impact of this has been. I'm going to test this over the last quite a year and just see how much trouble it got itself into, so we can look at worst case scenarios. Maximum open trades I'm leaving at 8. So from a drawdown control perspective, this is these two drawdown control settings are not gradual drawdown control. These are kind of line in the sand. If we hit 10% drawdown, shut all trades. When we get to 8, start to scale out of the oldest trades. Yeah, so get that average closer. So rather than doing aggressive drawdown control, this is kind of a version of aggressive drawdown control in the fact that we are just cutting losses. So this is kind of the if the market is in a parabolic squeeze, we're going to have to take some hits type thing. And then obviously last year we had a few of those, so I'm expecting this to trigger quite a few, but we'll see what happens. No aggressive drawdown control. So the entry criteria, I've moved back to 70-30 RSI, but RSI has to close above. Look, there's not even an example I can show you on this chart of that condition happening. There's one. So the RSI, the candle has to close above RSI, and the RSI reading on the hourly is above that line. And we have to then, in the next hour, have a reversal alert or a 3-bar reversal or a 9 MA cross happening while this is still extended. Yeah. So dropping down onto the low time frame gives us our reversal pattern starting within the hourly time frame. Whereas here, when we cross the moving average, we are below the line. And this is the problem I've been having with the hourly, the single time frame variation of the strategy, which is safer because it needs a stronger move to get you in. Only works if there is movement, which is obviously isn't working at the moment. So moving back down to 5-minute RSI, 5-minute entry or 15-minute entry. Again, I might test both of those this morning. Is going to get you in here somewhere on a lower time frame on a reversal alert or some kind of reversal pattern. So this is the basic bog standard strategy that I've taught all the time. So entry criteria, 3-bar reversals. Yeah, I'll take any 3-bar reversal that comes. I'll take every market reversal alert that comes. If it's not a tight reversal alert, So if we got the reversal alerts where we've had a big strong push and the entry signal is down here, the backup for this is if we do not get a nice 3-bar reversal pattern, the market reversal alert is going to trigger far too far away. So the moving average cross becomes kind of the middle ground. So ideal entry would be a 3-bar reversal, push, pause, pull on a 5-minute time frame or a 15-minute time frame. So a clean reverse over 15 to 45 minutes on a low time frame, or a very tight reversal alert. And if neither of those happens, we're going to take the 9 moving average. Yeah. So a not particularly quick moving average, but a medium sort of speed moving average. Normal time frames, cutting out the swaps, and everything else is just nothing. So that's the settings. So I'm going to pop this down onto M5 to start with. I'm going to just start with, what do we have good squeezes on last year? Yeah, that's pretty bad, isn't it? October. Yeah, so pound US dollar is probably a really bad case scenario. So we would have had a big squeeze over 2 months there. Obviously would have got out of it, no problem. Another couple of months there, got out of it, no problem. But I want to see how the drawdown got affected on it. So pound US dollar is a good test bed for the last 12 months. So let's go back to, just go January last year, 1st of January to the 1st of January this year. So just a 12-month test. I'm just going to run this visual to start with. Black. Why is that black? Might have to just quickly set up a template. What count am I in? Oh yeah, the right one. I've got a tester template. Weird. Right, anyway. Start again. Can't use a black chart. Right, so there we go. So RSI is extended below 30. So it's starting to draw in the reversal alert signal because we are extended. So now we're looking for entries. Only draws this in if there is entry possibilities. 3-bar reversal there. That wasn't obviously quite right from a measurement perspective of the 20, 30, 20. But that will give us a reversal alert entry. Hopefully. Just want to double check the logic is working properly. You're not going to give me a reversal, are you? Fine. Didn't get one. Right, okay. And now RSI is not extended anymore. So there you go, prime example. There was absolutely no signal there when the RSI was extended, so no trade. Right, let's run it through. Let's see if we can get an entry. Obviously picked a very quiet time. There we go. So RSI is extended now. We've got reversal potential. 3-bar reversal. The wick is too long on the third candle there, so that's not an entry. Right, we had a reversal out there. That hasn't taken a trade. Well, that's a good start, isn't it? Why is that not taking a trade? Swap filter. I'm going to have to remove the swap filter because obviously, we can't test historical swaps. So there we go. Just restart that without the swap on. Obviously, I would just be trading in line with swap. So again, this isn't going to be an accurate test, obviously, because some of these trades would not be taken, and other trades would be taken because we wouldn't be in positions in other trades. So there we go. So we did get an RSI entry there. Okay, so there's first entry. 1 ADR. First, second entry. One ADR. First, second, third. We'll pull back into propulsion. Okay, 1 ADR. Another propulsion gap. Didn't get an entry on that one. Second. See, it's given lovely tight entries now, look. See, these entries now obviously are going to be much more, I think, I mean, adding the reversal alert indicator back in, but also that 3-bar reversal indicator is going to give us much tighter entries further away. So where we're in the past with the moving average cross, there's advantages and disadvantages to every single signal. Moving averages get you in way too fast sometimes. 3-bar reversals get you in way too fast sometimes, but also right at the very, very top. So your spacing is absolutely spot on. Reversal alerts will get you in far too late. Yeah. So it's like the Goldilocks zone. Sometimes it's way too late. Sometimes it's way too early. Sometimes it's just about right. Which of the three? No idea. Depends where price goes after the one has triggered, doesn't it? So, but giving ourselves that opportunity now to take 3 different entry criteria, you can fine tune the entries to get the spacing a little bit, not grid-like, because we still need bearish price action to trigger an entry, but it allows, I think now, the EA to get us a little bit more defined and averaged spacing, meaning that those exits, I'm hoping, are going to be, well, that's what I've seen in testing anyway, are going to be easier to achieve. So there's a lot of extra scalping tests I want to run, especially with ADR reversals now, to try and take advantage of the new signal types that we've got, especially the 3-bar reversal. 4 entries, 5 entries, so we're going into a little bit of a squeeze on this one. Got that average line drawn now, which is absolutely fantastic. Didn't manage to get out of that. There we go. So out on 5. So 5 trades, RSI extension long, out short, out long. So straight in and out. So you can see the difference here. We're getting in and out and in and out and in and out very, very quick now. We're getting these 70-30 RSI extensions, but they're only at the moment staying extended for an hour or two before they disappear. 5-minute time frame allows us to take advantage of those. This is the whole point of multi-time frame analysis, is to get you in on bullish signs very, very quickly. So yeah, this is in and out. This is almost always in at the minute, isn't it? Right, so that's working fine. So I'm just going to quickly run a test non-visual, just so that I can see the equity curve, and I want to see how many times we're hitting those drawdown control points and total loss points at 10%. Because I want to be a bit careful with exposure now. If we're going to be running, if I'm going to be running a lower time frame entry, I want to make sure that the exposure is a little bit more under control, which will mean manual drawdown control a little bit more. But let's just see how many squeezes we get. I think there was 3 on the pound US dollar, 3 main ones last year. The main reason I'm doing this test is for spacing. So my normal spacing is 3/4 of an ADR. The main difference between this set file and the ones I've run previously on the market reversal alerts EA and on the position trader EA is that spacing. So the 3 things that kill position traders well, one of them obviously is spacing, but size is the other one. So the initial risk taken and lot multiplication and the spacing, those are the two things that contribute most to drawdown. So there's the first squeeze gone. So that big squeeze that we had over 2 months, there's 10% losses in there. So that is total loss. So every time you see a horizontal line, that's a total closeout, 10% loss. So the goal of this is not to necessarily find a set file that makes money, because obviously the conditions we had last year are not going to be the same this year. What I'm looking for is, are we surviving? And how often are we not going to survive, i.e. get into a squeeze? I won't probably use 10% as my limit, because I'll be doing drawdown control as I go. But I'm just looking to see how many times we potentially are getting to very large moves with 0.5 ADR spacing, basically, and that 1.3 multiplier. So I might do a little bit of system parameter permutation testing on this set file. I'm going to also test M15 in a minute, just to see if it smooths that loss out. But yeah, I want to do some system parameter permutation testing on it, just to check the difference between the 1.3 and maybe a 1.2 and a 1.1 multiplier, and then testing 0.5 and 0.75 distance, just to see if there is a better one that is going to sort of smooth this out. This is going to happen, it's inevitable. But as long as it doesn't happen on all 28 pairs at the same time, there's no problems at all, is there? This is why we have exposure rules. But if you look at the pound US dollar, for example, the euro US dollar will have done virtually the same thing. So you could count that as a 20% drawdown, potentially. Is that test finished? Yeah, okay. Right, so $7,000 loss, that's fine. Let me just quickly test that on M15. So we had 1, 2, 3, 4 max losses. So that one there, that one there, that one there, that one there. So 4 losing trades out of however many. Okay, so I'm just going to run this on 15-minute and just see the impact on a 15-minute. Now the difference, the main difference we've got now with the new version of the EA is that 3-bar reversal. The 3-bar reversal on the 15 minutes happens within 1 hour. So when we get that hourly RSI extension, the 3-bar reversal on the 15-minute is as close as we can get to getting a reversal within the hour the RSI gets extended. So those ones where the RSI just touches that 70 level and then dips away, we can get a 3-bar reversal on. You'll never get a market reversal alert, and probably not a moving average cross, but a 3-bar reversal is a price action at the very pinnacle, the peak of the price action. So I'm just seeing if the 15-minute actually has a massive difference. Yeah, okay, so it's more profitable overall. We had 2 losses, not 4, and we ended up not losing money on the year. So H1 M15 seems to be a better scenario. And obviously, don't bear in mind, I'm testing on the biggest dog of last year, which is the pound US dollar, which squeezed multiple times. So this is kind of the horrible instrument, if you like. I'm just going to quickly turn off the moving average entry and the reversal alert. Actually, I'm going to do a quick system parameter permutation test with all 3 of those, just to give me an idea of how effective the 3-bar reversal is on this time frame versus market reversal and moving average. Let me just see how long this is going to take. Don't think it will take too long. Talk amongst yourselves. Anybody still here, by the way? Because I can't see how many people are in here. You might have all gone now. It's an hour in. I will just carry on testing anyway, even if there's nobody here. Let me just see how long this is going to take. Oh, I haven't clicked optimization. How many times have I done that? Walked away from my terminal, come back and gone, wow, that was quick. Let's see how long this takes. There's only 8 tests to do, so it shouldn't be too long. Probably a minute or so. Okay, pulling back on the DAX. So DAX has stalled out basically at yesterday's high. Getting range bound. Still only up 7% today. Chris is here. Bill is still awake. Excellent. Leon's still here. Back testing, watching, listening. Good. John's doing back testing while I'm doing back testing. That's good. Right. No trades taken. Oh, that'll be because we've told the EA not to use a 3-bar reversal, not to use a market reversal alert, and not to use a moving average entry, i.e. don't bother trading. So some of these are going to come out as zeros, obviously, because we've told it don't bother getting in. So all profitable. That's good to see. So 15-minute time frame, more optimal than M5 at the moment. M5 more profitable when there's no squeezes on. When there is a squeeze on, you're going to get hurt more often. So again, nothing. It's not telling me anything new. The lower the time frame, the more risk. Which is why we try to do analysis on hourly and 4-hourly time frames, because the slower you're trading, the less risk you're going to take, the less danger you're going to be in. It's all about controlling risk and controlling danger, not making money. Survival is the game. So there we go. 7 tests out of 8 done. 8 out of 8. So all profitable bar 1. No, all profitable. Sorry. Yeah, okay, all profitable. That's good. Let me just check. That's right. So 3-bar reversal. So the profitable, it's interesting, isn't it? The most profitable combinations there with 77 trades each are the moving average entry and market reversal alert. The reason those two are the same is because if you remember when I was going through the video on the position trader 2, the market reversal alert is usually always the last to trigger. So what that is telling me, the fact that we've got exactly the same results, but we're using 2 different entry criteria, one using market reversal alert and moving average, and one using moving average only, it's telling me that the moving average was the only thing that triggered trades. Market reversal alert was irrelevant. So when you turn that off, you get exactly the same result. So moving to the next set of results, which again are exactly the same, using the 3-bar reversal and the market reversal alert, tells me that the market reversal alert didn't trigger. All the trades were taken using a 3-bar reversal entry. So you get less profit with the 3-bar reversal, but you're taking less trades. Moving average is going to virtually trigger every time there's bearish price action. 3-bar reversal will only trigger if there is a strong reversal pattern at the high. So last one there, using 3-bar reversal, move market reversal alert and moving average, or not using reversal alert. So this tells me that the reversal alert on its own did not trigger any trades. That's interesting. So you wouldn't have got any entries because the moving out the because now we've got the RSI having to signal and close above that level. By the time you get a reversal alert on the 15-minute time frame, you have to have at least an hour or 2 pass for a reversal alert to trigger on the 15-minute time frame. If you think you've only got 4 15-minute candles an hour, if the RSI gets extended above the 70 level, you've got to wait at least an hour for the next candle to signal RSI closing below. Within that time, you're not going to get a reversal alert. So you need to use a 3-bar reversal or a moving average entry on the 15-minute time frame. So that's interesting data. So market reversal alert or moving average entry, basically moving average entry, on the 15 is the one to use. Failing that, a 3-bar reversal. 3-bar reversal reduces your drawdown, but also it reduces profitability. So at the end of the day, they all work. So it doesn't really matter. Testing this on the hourly, I do not think I will get any signals. I don't think I'll get any trades. I'm going to run it anyway, just to verify. Or I do get some trades. 19, 36, 1.93% drawdown. That's the holy grail, look. Profit factor of 9.6. Look at that. So now that's really interesting. That's really interesting. Okay, so taking a 3-bar reversal on the hourly time frame. So basically, we're using an hourly RSI extension, triggering on the hourly time frame. So this is how I was running before Christmas, using hourly time frame only, not multi-time frame analysis. So this is going back to triggering on the hourly time frame using the hourly RSI extension. What this is saying is, if we wait for the RSI to be extended above the 70 level, okay, has to close, the candle that we're using for a signal has to close above that 70 level, and it has to be a 3-bar reversal, meaning that we've pushed up, we've paused, and we've put a bear candle in that's broken the low of candle 2, and we've closed above the 70 level still. Yeah, we're going to take 1.9% drawdown on the account and return. Is this a 10K account? Yeah, 28%. That's a massive, massive profitability. Not many trades though. 19 trades in a year, so you're looking at getting 1 entry a month. That's incredibly profitable. Let me just run that in visual. Just want to see the trades. So we took 3, 3, 2, 4. 1, 2, 3, 4, 5, 6, or 7. 6, 2, 3, 7. Loss. So we had 1 loss. That's it. That's weird. I'm getting a totally different result. 2,885. 603. Why am I getting a different result with that setting? I had this the other day. Something isn't right with this back test. How can that be? So in running an optimization, I get that result, 19 trades. Running live in visual mode, I get 40 trades on the same set file. I don't think this is loading. When you set the input parameters, I don't think this is loading correctly. I know, that's bizarre. Slightly worrying that I'm getting a different result every time I run that test. There's the loss. Yeah, if I run an optimization, we get a different result. Something's not right with this back test, is it? Somewhere. True, true, false. I'm going to run this on every tick. See what we get in every tick. Still here? Had to leave PC for a short while? That's okay. You're allowed. Just running a quick every tick test. I need to verify these results. It's going to take a while to verify these results because I need to check what's going on with this data. I might test this in another terminal in a minute and just see what that happens there. I thought that was a bit too good to be true, that result. A 9.6 profit factor with 2% drawdown. Sounds a bit too good to be true, doesn't it? However, that was a 10% loss. If we remove that 10% loss factor, I'd be interested to see what that actually goes up to as a max loss. So yeah, this is trading exactly as I'd expect it to. It looks to me like in the optimisation run, it's not taking that that 10% loss somehow, which is why we're getting that figure. Trying to think. I mean, the logic is the EA's logic's got nothing to do with it. The tester is the tester. You should get the same results in optimization as you do in a single test. Seems the same behavior issues it had with the fib levels while testing the lazy when optimization results returned out different from visual single runs. Yeah, I mean, they're totally different EAs. Don't know what that would be. Be interesting. I just want to run this test and let this test run and just see what we get. It's towards the end of the test that it went pop, wasn't it? So that only took 19 trades. We've already taken 16 trades. Oh, this is a 50k account. Oh, okay. So it didn't make 28%. It's made 2,800 on a 50k account. So about 5% in the year. So that might be right, but just getting a different equity curve, that's just weird. We'll let that run for a little bit. So yeah, basically the key to this this test is just seeing which time frame really is the best to run on. At the moment, it looks like M15 is better than M5, but that's nothing new. I know that because you're getting less chop basically, so you're going to take less signals. But the signals you do get on M15, you've got 4 candles in a 1 hour candle, obviously on M15. You've got 12 candles on M5. So the opportunity for signals is 3 times greater. Therefore, the opportunity for chop is 3 times greater. So you're going to get a lot more false signals. So what I may do is try and run on the 15-minute time frame. The key test for me this morning is that 3-bar reversal pattern. Because we know the moving average will most of the time signal before the reversal alert. The reversal alert is going to give you stronger signals of confirmation, take less trades and make it harder to make money. That's kind of the middle ground. This 3-bar reversal is really what I wanted to test to see what impact this has. That hourly test that we're running at the moment, if this comes out on tick as a very good result, I'll be very happy. If this comes out at 9.6, running this at tick level, it doesn't get any more confident than running at tick level, does it? Then we're on to the holy grail. Well, I'd have to test it again. It's got to be out of sample tested and everything, but we'll see if it does get there. Got a third of the test to go. I know that this is roughly where that blow goes. So we're going to get squeezed in a minute, unfortunately. We will see. So the other test that I want to run quickly this morning was ADR reversals. Looking at a scalping strategy, one in, one out on ADR reversals. So now we've got that new input that means that we can be assured that we'll only take a single entry on every ADR extension. I want to try and look at a stop loss based strategy based on ADR intraday, but using 3-bar reversal and moving average entries. And just getting in once. So the idea is going to be very similar to what we're using here, which is when we get to ADR, get in and get a tight couple of entries in and try and get out very, very quick with a quarter, 0.5% ADR, 0.5% profit, something like that. But a quick sort of scale-in scalp above ADR. So any of those ADRs that we get where we sit around up here for the day, those ones want to try and get out of those by sort of within 24 hours, basically, with either a profit or a loss. Or if it's going to get us in and scream up to a 200 ADR, we're going to take a loss on the first trades. But it's a very similar strategy to what we're doing on this account here, where we're scalping in and out really, really fast on RSI on the 1 minute chart, just using, you know, extension elastic band theory to try and put together a set file that can trade as a hybrid. Again, for diversification, I want a hybrid strategy, ideally, that I can run that is in and out, not position trading. So H1M5 or H1M15 for swing position trading on the hourly time frames. I've got ORB running on indices, scalping breakouts. I want something that's going to run and try and scalp mean reversion intraday. ADR reversals is an obvious choice, but now I've got tools within the position trader EA that can hopefully execute a kind of hybrid stop loss based strategy. We're definitely in a squeeze here because we haven't taken any more trades. So this is October 2024. Here we are. This is the squeeze starting. I'm surprised we didn't get out on that. Average is there. See, it got back to break even. If it had managed to get another entry there, which it didn't, I can't believe that is 10 trades. That's annoying. But it is what it is. It happened, and we would have been in it. We're into November now, and we have not taken that squeeze. Something's very different in that optimization test. I'm losing faith in the optimization test all of a sudden for some reason, and I don't know why, because I've never had that before where I've actually set something that's given me a different result. 1, 2, 3, 4, 5, 6. So that took 6 trades off. So this is running at tick level, which is obviously, you know, this is accurate, 99% accurate. So we have taken the squeeze. Look, there we go. So it did take the squeeze. So at tick level, we are actually getting that loss. 1, 2, 3, 4, 5, 6. Okay. We're not taking any more trades, so we're in December. So, right, let me just quickly rerun this. 1 sec. Just want to try something. Real world. Let's remove that 10% and let's remove that 8. I just want to see what how many trades it got into as a worst case scenario, basically running this hourly strategy. So I'm going to do this back on control point so it's quick. I'm just curious to see why that loss happened. I mean, it's a 10% loss, I'm pretty sure, but I want to see. Right, so it was still in drawdown at the end there. So we've closed out in 1, 2, 3, 4, 5, 6, 7 trades. We were up 56. So we were in just over 6 grand's worth of drawdown at the end of the year. So the whole year, it was absolutely fine until October. Sorry, November, where it went into drawdown. So it's this squeeze here. So it survived everything basically last year, that hourly set file. And that's where it got hit. So this grindy bit here, it got out of. That was fine. Interesting. Let me just run that quickly over a longer period. I just want to see what it was like for 3 years. Only taken 1 lot max. It's hardly any risk. This is just using 3-bar reversals on the hourly time frame. So basically, so that's 80 grand, 50k to 80k. That it looks to me like this. Would we have got out of this? Let's have a look at where this squeeze is. Yeah, I mean, we would have been out of it. Worst case scenario, out of that. So you would have survived it. You just would have taken about 10, well, probably a 12 to 15% drawdown. Interesting. So basically what this what this set file is mimicking here is just literally a 3-bar reversal at high of day. So what we're saying is when RSI gets extended, we're obviously going to be at the high of the day. So when you see price action at the high of the day reversing on the hourly time frame, so you've got 3 hours of price action where the market stalls and pops back down again, we get in and we try and grab an ADR. That's basically what this set file is doing. So it's using RSI as the condition indicator to identify high of day and 3-bar reversal to identify bear price action or bull price action. Elastic band theory, waiting for the profit take move to come in. So that's basically what that set file is doing very well. This is the most horrible squeezy thing that we've had for the last couple of years. I'm just trying to think of something else we could test it on. Aussie New Zealand would be a good test. This probably will blow. But this would be a good test to see if that survives the Aussie New Zealand as well, because we had some nasty squeezes on that. That's Euro New Zealand, Lee. Select the right thing. Interesting set file, that. I'll stick this in the members group in a minute. Oh, blown. You can always tell it's blown when it goes that fast. Pop. straight away. Almost immediately. Look at that. Literally, it took 15 trades. So it went straight into a squeeze immediately in March. First trade, it took 2 trades, and then it just went bang, pop immediately. We're trading 9 contracts, nine lots at the end there. Way too big, way too fast. So that can be combated by changing the ADR distance and lot multiplication. So if we get a little bit less aggressive, again, Aussie New Zealand was an absolute nightmare. Few big nasty moves on that. There we go. So less aggressive. Now we're surviving. Still hurting, squeezed, but so that 1.3 multiplier and half an ADR spacing is something that probably needs to be adjusted. I think I'm probably going to do all this testing and come out at the end of the day going, yeah, 3/4 of an ADR, you know, what I've used for the last 5-6 years. So there you go. So that's taken a fair amount of drawdown, 31%. You wouldn't have taken that drawdown. You'd have taken a loss on it. So, but again, Aussie New Zealand would have been a loss for the year. Everything else was a win. So, you know, they all pay for each other. This is a portfolio approach, isn't it? So I'll just set that back to 0.5 and 1.3, which was what it was. And I'll pop this in the group. So, and you can test this on M15, M5, and H1. Come to your own conclusions with it, basically. So let me quickly save this as a 3-bar reversal and a reversal alert, not using moving average. There we go. So it's that one. I'm going to go H1 M15 or H1 M15 multi-time frame or H1 set. I'll call it that. So I'll stick that one in the group in a minute. I'm just going to quickly load up the ADR reversals and quickly do testing on this. So this is the timed exit strategy that I've got running. So basically what this does is it takes ADR 125 extensions and it's risking £200 or $200 in my account's case per trade. And we are using a 1.25 multiplier, scaling in 1/4 of an ADR apart. So it's a quick in and out type strategy. The main difference is this. So if I run an optimization with that turned on and off, this is the main difference in logic. In quick scalp exits, this would be taking potentially multiple trades a day. And what it would do is the ones where it takes a quick trade, gets out with a profit, and then takes another one because we've got an ADR extension and another signal short. So basically the market goes ADR, reverses, take profit, pushes up, pulls down again, new entry, and then goes into drawdown. These would not be taken. However, the ones where you get your new entry and then it does that because you get an end pattern reversal, you would have had double the profit in the day. Swings and roundabouts. It's the same as everything, isn't it? It's either going to go up or down. So I just wanted to test it with this new setting to see what impact it has on those single entries, because what it's doing is it's risking $200 over one ADR, but it's looking to get out on single entries on a half ADR. So the target is $100, which is basically half an ADR of movement. So we're going up 125 ADR. I want it to pull back to 75% of ADR. Yeah. If we get 2 trades on because we've pushed and we've gone above 125, we've pushed up to 125 ADR because we're spacing 1/4 of an ADR apart. I want to take 2 trades and then I'm looking for 1 ADR of movement back down from 150 ADR. So, you know, 50% retracement roughly. So that's the logic on the strategy. it automatically, this was only using 2 trades as a maximum. I'm going to turn that off because I don't think that would be necessary now with a 3-bar reversal. But it also gets out on Fridays. So on a Friday, if you've got open positions, it just shuts the lot. Yeah. So I'm just going to test this. This runs on M5. Let's just test it on the pound US dollar to start with. Using control points should be fine because that'll be trading on a 1-minute chart. And we'll just see what the equity curve looks like on this. Now, it's going to have lots of hits on Fridays. Basically, anything you get into on a Monday on an ADR reversal that does not reverse, the Friday is going to be bad. Yeah, we know that. But when it's not doing that, it's great. We know that too. So this strategy works very well. But I'm interested to see now, removing that 2-lot maximum, how many times on a Friday we get hit. There's one. And how many times we don't get hit on a Friday. There's another hit on a Friday. We made a loss there. There's no reason you'd make a loss unless it's a Friday, because we're closing out trades that have not hit target for the week. Seem to have stopped trading. No, just wasn't a quiet week, I guess. So that's taken 1, 2, 3, 4, 5 trades and then closed out. 1 trade, 2 trade, 3 trades, 4 trades, closed out. So maximum trades we've had on is 5, which means we've moved 125 ADR, and then we've moved up somewhere around about another 125 ADR. So a 300 ADR push in 2 days, 3 days. That is that there. Singles, in, out with half an ADR, 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 perfect scalping. And again, just if it's working and it pushes up and it pulls back, done. There's a Friday loss. And again, turning off the Friday loss, if you go into a squeeze, remember ADR is the very first move in a squeeze usually. So if we got a market going like this, that's your breakout. If it's going to go into a trend squeeze, you are in on day 1 of the breakout. This is why ADR reversals for long-term swings are a lot more dangerous, hence the Friday exits. If we haven't done what we want to do within the week, I don't want to be in it anymore. It's a short-term in-out strategy. Obviously, it's going to take losses because it's kind of a hybrid strategy in that respect. But the key difference now is we're using market reversal alert and 3-bar reversals, not moving averages. So we're using actual strong bearish price action as an entry signal. I've just realized I'm doing this test over 3 years. So this is going to take a little bit longer than I anticipated because it's on a 5-minute chart. But yeah, it's working. It's good. So nice, healthy stop loss based equity curve. Yeah, lots of losses in it, which is good. When the market conditions are right, we're in mean reversion. We're banking money. When the market conditions are not right, we're in trend. We close out at a loss. The loss is the variable here. The static is the TP, which is 0.5 ADR or 1 ADR, depending on whether there is a single trade or multiple trades. The loss is a complete variable because this loss amount is dependent on the distance moved intra-week before Friday and the day that you enter the ADR. So this is a variable that will never be consistent in the future. So this is why back testing and robustness testing with this type of strategy is so important, because when you've got a variable that is in control of your losses, your downside is very unlimited. When you've got a variable, when you've got a fixed downside of 0.5 ADR, for example, but you've got a variable upside in the fact that you let it run and you close it out on a Friday, your upside is the bit that is going to be very hard to replicate in the future. When you're using a fixed stop loss and a fixed TP, there's a high probability of that being repeated in the future. But when you've got variables based on time, obviously price action is random every day, therefore you're never going to get the result every day the same. So this is holding up pretty well. You're going to get periods of stagnation No huge losses because we're not holding trades for more than 5 days, but we are scaling in a quarter of an ADR apart. There we go. Just as I said that, look. Right. Let's have a look at that one. Yeah, so there we go. So 3rd of February 2023, we had a parabolic push that week. Oops. Let's go and have a look at that. March, April, August. There we go. I was just going to say, I bet it's there. It is exactly there. Yeah. Oh, what happened on the 3rd of February 2023, everybody? Liz Truss crashed the market. So this is Liz Truss deciding that we're going to completely change the way all the economics in the UK work. And this is Bailey bailing Liz Truss out. Yes, of course it's going to explode. Nothing survives this. If you're not using a stop loss, you're dead. Yeah, so that Friday, we got out with the lot. This is what I was saying about the downside as a variable. This is if you like, a black swan event, if you want to call that a black swan, an event that is unprecedented and will happen very, very, very rarely. You can't do anything about that. You could put a backup in there of a max 5% drawdown or something. I had a 2-lot max, a 2-trade max on. That will avoid that. But, as long as we don't get something like Liz Truss crashing the market again in the future, because she's not going to be in charge, and Kwasi Kwarteng. I love the way they got Kwasi Kwarteng, the Chancellor at the time, that agreed to all of this. He is now the financial consultant on Good Morning Britain. Yeah, let's get the guy on and ask him finance questions, because he's really qualified for that. Anyway, just run this test and see what happens. So apart from Liz Truss, it's a pretty healthy equity curve and pretty stable. So there will be probably bits and pieces that can be smoothed out on this as well. And I'll look into this a little bit more. But again, ignoring Liz, this looks fairly healthy as well. Not massively profitable. It's not going to generate an absolute fortune because we're waiting for ADR hits. So, if we go a week where we don't get a 125 ADR extension, you ain't going to get any trades on, are you? But the thing with this is, again, we're using the 3-bar reversal. So what we're saying with this strategy is when we get an ADR hit, I'm just trying to see if there's, that was probably ADR, wasn't it? What is it? Yes, we got an ADR hit there. So what we're basically saying is when we get the ADR hit, that has end of day, so you wouldn't have got a trade. But if that was an ADR, for example, in there on the 5-minute time frame, you're going to have a 3-bar reversal at high of day. So the 3-bar reversal typically with this will only happen at high of day or a reversal alert. Good old Truss, eh? You ruined my back test. But, oh, hello, we've got another one. So there's another blip there. What was that? July, 14th of July, 2023. Or was that Liz Truss? Maybe. One of them is, isn't it? Have a look at that one. Fourteenth of July, 2023. Oh, it was trades taken on the 10th, started on the 10th of July. There. Okay, so it's a 3-day push. Right, there we go. So this is Monday. We got an ADR on Monday. We took an initial trade. It went parabolic on Tuesday, didn't pull back enough to get out. Parabolic on Wednesday, didn't pull back enough to get out. Thursday and Friday, sideways. Yeah, so that was your entry. You scaled in a quarter of an ADR apart until there. And then you got out on the 17th, sorry. Sorry, no, that's not it. That's not it. It's here. So this is your first entries up here. Parabolic move and up there. It doesn't matter which of them. If you'd have taken that or that, either way, you're out on the Friday, aren't you, with a loss? So this is where you're not going to be able to survive. So we're getting moves somewhere in the region probably of 3 ADR within a week, solid straight up with no pullbacks. Yeah. So that's where you're going to want to put in things like a maximum lot limit or some kind of drawdown control. But to be honest, not a lot you can do with those. So you're going to get these every now and again on instruments, and there's not a lot you can do with it. This is why ADR is risky. But incorporating a stop loss into this is now possible at ADR. So what we can do is using a stop loss is equivalent to using drawdown control. So obviously drawdown control is probably the most obvious thing to use, but using a stop loss with these as well is now also another option. So we're using a stop loss at 1 ADR, which means that we can get out if we move 1 ADR against us with a $200 loss. So we take a $200 hit every time. And then basically, let me just try this on 15 minutes to speed it up a bit. Those ones where we're getting those big, strong parabolic moves, we may be able to get the average close enough to get out. The other thing I want to try with this is a very tight exit target as well. So targeting less than half an ADR. So a real quick scalp in and out. Big stop loss is being triggered. Look. The ADR strategy is going to need a little bit more work, I think, because it's there's so many more variables with ADR, because obviously you've got news to take into account. With RSI extensions, we're swinging longer term. With ADR, we're trying to get in and out within a week. So news events are really going to skew this. You know, and there's an argument for using news filters with this type of strategy. However, this type of strategy is created, the possibilities and the entry signals are created by news. So if you say, I'm not going to trade around news, you're not going to get your ADR hits a lot of the time. So a lot of the trades which are positive, which are ADR hits on news, pullbacks and continuations where you make money, you won't get those. So you know, it's the ones where we get those fundamental shift news events that do that and then they don't stop. Those are the ones which kill this type of strategy. So, you know, it's CPI numbers that come out way different to expected ones, and interest rates where they just decide to change the interest rate without telling anybody, like the Swiss. That's why it's so volatile to trade. Those are the ones it's not going to work on, but that's not a bad equity curve. So again, it's using stop losses. So it is taking regular hits, look. So we took a stop loss there, averaged in and got out with a profit. So the reason that one made an exit there was because we had that stop loss taken, which brought the average a lot closer. And again, lot multiplication will play a big part in whether this is profitable or not. But this will still hurt with Liz Truss's moves and things like that. So again, I'll go run this, run a few tests on this, and then I'll pop a set file out in the members group for this as well, and you can do some testing. But overall, the testing that I've done a little bit of testing when I was developing the new version with the 3-bar reversal and the market reversal in it. I was doing some testing as I was going, and these are kind of the findings that I had. Was 15-minute time frame is better than M5, smoothing out your equity curve, and also the 3-bar reversal makes a big difference to the spacing. So where the reversal alert on the market reversal alert EA was often missing opportunities to get you in, the moving average was getting you in on accumulations. The 3-bar reversal gets you in on strong pullbacks. So it's you know, it's the best signal. I've been going on about 3-bar reversal since I've been trading, since I discovered the pattern. It's the holy grail of price action. It's basically market exhaustion in a 3-bar pattern. So it's the banks getting kicked to the sidelines, if you like. There we go. That's a lovely equity curve. Not a massive amount of money, but stable. That's what we want, isn't it? We want something that just generates stable income, which is what this is. And obviously this is just one instrument. You've got 28. So that's not a bad little set file, that one there. So that's using the 15-minute time frame with 3-bar reversals and market reversal alerts, no moving average crosses, 125 ADR, scaling in a quarter of an ADR apart. Yeah, not, I mean, it's not setting the world on fire financially, but it's not going to, because it's only taken 90 trades. Yeah, it's 125 ADR reversals. We don't get them every day, do we? Not even every week. So there you go. So there's a fairly decent set file there, using 125. And again, the main difference between this version and the version that I was running before, which I forgot to clarify at the beginning, was this. Last closed candle must be beyond the ADR level. So when we get that 125 ADR extension, yeah, that signal has to be above 125 ADR. Not we've tapped 125 ADR, put in a hammer, given a 3-bar reversal, and we've entered at 90 ADR. We need to be entering above 125 ADR. Much stronger elastic band stretch. Yeah. So much bigger push. That's the other, I've completely forgot to mention that, but that was one of the main things I was testing. So there we go, 3-bar reversal, market reversal alert. We're not using moving average signals. If you put moving average signals on as well, you will again get different results, because where we have got a 125 ADR and we haven't had a 3-bar reversal and the market reversal alert has been below the 125 ADR level, somewhere in there, you've probably got a moving average cross. But if that moving average cross is on one of those days where we get a flag or an accumulation at ADR, because the news event's been fundamental, it will continue. So moving average crosses are useless in accumulation scenarios, whereas 3-bar reversals are either that or that, usually. So there we go. So you can test those. I'll just turn that off that for a minute. Where was it? I'm just going to turn off the moving average signal because that wasn't part of that test. I'm going to save that one. Hang on, what was the other criteria for exits? So that was those exit targets. Again, we could try bigger exit targets on that. It's a mean reversion strategy, so it's, you want to be scalping really. So yeah, we're getting out on Friday. So the only exit criteria that is hard coded in this is Fridays. So we're not using drawdown. We're using a stop loss. We've got fixed stop loss in it, which is 1 ADR apart. So, you know, we're saying we'll give you 3 or 4 trades before we start doing DD control. But the main thing is on a Friday, we get out. So if there's any massive gaps, and this is quite key at the minute with Trump, if there's any massive gaps, you do not want to be in an ADR reversal with 5 trades on when Trump gaps the market 300 ADR because he's announced a tariff. That's going to hurt. Yeah. Same way as if Liv's Trust decides to crash the markets, it's going to hurt. So this is a kind of a fail safe on a Friday, which is good for the ADR. So I'm just going to save this. There we go. ADR 125 1 ADR stop. Exit Friday. Save. There we go. So I'll put these in the group now, and you can test those. And obviously have a play around with them, but you know, give it a decent test. Get expectations in place for what it's going to do, because when you're actually looking at it in real time, obviously everything moves an awful lot slower. So yeah, that ADR, that RSI set file is the one that I've pretty much got running now on the account. So it is going to start to get a lot more trades in. I'm going to switch over from M5 to M15. So where this is running at the moment, when it loads, on M5, I'm going to switch that over to M15. So it's not going to trade on the 5-minute time frame. It just smooths it out that little bit more, and it is going to miss some entries, but it just smooths it out that little bit more, and I think it'll be a more livable strategy, and it's going to space a little bit further apart, which is what I'm mainly worried about, because when this market does decide it wants to take off, we're going to be in trouble. God, look at that. Stopped out 10% of ADR. Boom. $264 loss. Unfortunate. Never mind. Right, any questions on any of that? Anybody still awake? This is where it's silence. I'll leave that open because I'm going to change that in a minute. Let me just get these set files. Pop these set files in the group. Play around with entry signals, signal combinations, ADR spacing, and lot multiplier. There we go. Yes, you have got a question, Evil, or yes, you are still awake. Obviously, I know you're still awake because you said yes, but that's fine if you haven't got any questions. Let me just grab these set files out as well so I can stick that in here. Right, that's all for today. I'll be back tomorrow afternoon, and we'll go through obviously usual stuff. But hopefully we get some movement today on something, and we can bank some money, because at the minute it's dire. Just really struggling to make cash at the minute because stuff is not moving. How are we doing at the moment? Not gone anywhere, still in 4%. So that pound odd, there's a few bits actually that are in decent. I've got some, I can actually bank some profit today. So we have actually got some movement. New Zealand US and US CAD are on the move, and the pound odd. So pound odd, hopefully that's going to hit target today. New Zealand US and US CAD. Let's have a quick look at those. So I've got this set up. I've got the levels set different on my dashboard. Pound odd, New Zealand US and US CAD. Pound odd. So yeah, pound odd, that's literally just about to TP. So this is this within the next hour, this is closing. So we have tapped into the zone. So if this closes there, it's going to close literally. How long we got? 10 minutes. So, you know, this is going to close out probably within 10 minutes. New Zealand dollar CAD. Sorry, US dollar CAD, wasn't it? No. What was the other one? New Zealand US and US CAD. Oh yeah, because US CAD, I've got a position in profit. So this one's in a fairly nice profit at the moment up here. So, but you know, we are so close. We're not far away at all from average on this. So this is, you know, I'd really like to get this up there today. We've got no news catalysts, but New Zealand dollar, US dollar, that's now in profit. So I've got some TPs. I can take that off at any point. But again, one of those things, if we push down into here, and I happen to be spotting this on the chart, might just shut it out in case we get a double bottom bounce off of that level there. This is news. So news spikes obviously aren't necessarily the level that the banks and institutions have been buying at. So we will see, but it's on its way. Good strong US dollar looks like this morning. Wouldn't say it's actually that strong. It's not actually, is it? Looks like we've got some New Zealand dollar weakness, more like it. Yeah, New Zealand dollar's weak this morning for some reason. Australian dollar, I would imagine, is also weak. Yeah, so it's the Aussie Australasian pairs are struggling this morning. Both of them. Yeah, so you look at the Aussie New Zealand, as it's going sideways, it means they're both weak. Otherwise, one would be taking advantage of the other. So many options in the new EA now. Nice work, but lots to test. Yeah, but that's the whole point of it. It's got lots of variation. Yeah, there's no point in buying EAs that or building, in fact, EAs that that just do one thing. You know, the market, it doesn't work like that. You've got to be able to change and adapt. Yeah, so this is why all of the EAs that I build are built for testing. So everything I ever do from an indicator or more from an EA perspective is all done to test strategy. And what most people that sell indicators and EAs do is they will develop a strategy. They will never tell you the strategy, and then they basically put an EA out there with inputs for risk. You don't know why it's working, how it's working, what it's doing, what it should be traded on, and you cannot parameter permutation test it to see whether it's robust. So, of course, you buy it, it fails because they've only curve fit it to the most recent price action. So everything that I build has got every variable there so that we can test what is good and what is bad, and test what levels within what sort of restrictions within indicators and risk parameters work and what doesn't, because you don't know what is going to work in the future. So you need to have confidence that if you put that EA with those settings on the 5-minute, the 15-minute or the hourly time frame, it comes out with a profit. Brilliant. So it doesn't matter where I put it. No, that's great. It doesn't matter whether I use the 70 RSI, the 75 RSI, or the 80 RSI. They all generate a profit. Brilliant. So it doesn't matter whether the variance of RSI in the future is 10 or 15% or something different from what it's been in the past. It will make money. It's all about proving risk concepts, not finding the right setting. Yeah, because there's a billion settings that work. Yeah, market's random, it goes up and down. So it's all about finding what is better to do and what is not better to do. We know that spacing is very important. We know that sizing is very important to making money, and drawdown. So if you space your entries close together, yeah, and the market pushes hard, you are going to be in more drawdown. If you space your entries further apart and the market pushes down, you're not going to be in much drawdown. Yeah. So is it better to do that or that? If you're aggressive and you want to make money fast, do that, but you will blow your account. If you're conservative and want to make long-term income, do that. The initial lot size here or the initial lot size here is going to make a massive difference to your drawdown and your profit. So that's what backtesting and EA development is all about. Applying risk, and risk is basically, for position trading specifically, is about the sizing and the spacing of your positions, and when you take your initial trade using a stretched market condition. If you're using a stop loss, it's all about stop loss placement and TP placement. But stop loss and TP placement are constants in a variable market. The market that you test a stop loss and a TP based strategy on in the past will never repeat itself in the future. So every fixed constant you have in a strategy, when you backtest it, has no relevance on future price movement. This is why everybody develops all of these wonderful strategies using indicators, and they never ever work, because they've tested them visually over 2 years worth of charts, and they've said, I'd have taken a short there with a stop above the high and I'd have taken a 2R return. Yes, that's great, but if you actually build an EA for that and test it over a decade, you'll see that that 1 year you tested it over was a complete fluke. Never going to happen. Yeah, position trading doesn't have that problem. But you've got to be able to stress test the variables. Yeah, which is why I'm not as much of a fan of ADR reversals as I am of RSI extensions, because I've tested ADR reversal against RSI and they both work, but RSI is more comfortable for me. Other people love ADRs because they'll bank these huge big weeks and they'll go, this is killing it. If you're that type of person that needs the pleasure sensors pushed regularly, ADR reversals. But if you don't like the pain receptors, RSI. But you'll only know that through testing. So you've got to have the ability to fine tune everything. I think in the end, the issue is we'll be able to stick to a strategy even in bad squeeze times and not trying to settings hop. Yeah. But there is, I mean, if you go back and look at the boot camp, I was using the 14 RSI on the hourly and all sorts of stuff. You know, this is using this strategy that we've got running in here is using the 5 RSI. I don't use the 5 RSI ever. It's done 11% today. I'm becoming a fan of the 5 RSI very, very fast. 143% return in 4 weeks using a 5 moving average on a 1 minute chart, a 5 relative strength index on a 1 minute chart. Who'd have thought it? But, you know, I've got to deal with this 8% and this 5%. This is the issue. How to deal with that. I'm going to do some testing on this. Yeah, moving. You do need to fine tune every now and again. But in my experience, the problem with fine tuning strategy is you are trying to fix a problem that doesn't exist. The problem at the moment is the market is just quiet. It's not a problem. It's just what it is. Yeah, the sun comes up some days, other days it's got clouds. You can't do anything about it. It's just what it is. You've got to deal with it. So we're in a quiet market. When this market explodes, you're going to wish that you were spacing your entries further apart using bigger RSI extensions. But if this doesn't explode for 3 months or 6 months, what are you going to do? Yeah, so you have to draw a line in the sand somewhere, but it's not a case of dropping from a 21 RSI to a 5 RSI because the market's so quiet. You drop from a 21 RSI 80-20 to a 70-30. See how that goes. And you make baby steps. And when it starts to come back to life again, you stay there. When you suddenly think, why am I getting squeezed so much? You'll go, it's because I moved from 80-20 to 70-30. When you start getting squeezed 3 or 4 times in a row, you then go, right, market's volatile. Let's get back to 80-20 and let it move further before we take our first entries. There's nothing you can do. You have to do that at some point. But there is no scientific way to do it. You've just got to do it. You're changing. You are still trading the same strategy. You're just adjusting parameters. You've tested 70-30, you've tested 80-20, you've tested 60-40. If all 3 of them in the past 5 years have generated profit, it doesn't matter which you use in the next 5 years. Just one of them will be better than the other. And you can only identify one is better than the other when one of them just stops working. Yeah. And that is where we are at the moment. This strategy was killing it for 6 months. It's dead as a doornail. It's not changed. The market has. So that, you know, this is again, you know, everybody's looking for the holy grail that will survive everything. There isn't anything that survives everything. Everything fits a regime. The regime now is different to what it was last year because we got a new leader in the free world and he's just cocking it up. So the markets are just sitting there going, I don't know what to do. If you don't know what to do, you do something else. And that's exactly what they're doing at the moment. They're just doing something else because there's nothing to do. You don't know whether to buy the US dollar to sell the US dollar. You don't know whether to buy the CAD to sell the CAD. You don't know whether the Europeans are going to get trade tariffs. So should we buy the euro? Should we sell the euro? Is the war in Ukraine going to end? If so, what impact's that going to have on the euro? If he's going to put 100% tariffs on China, what's China going to do in response? How's BRICS going to affect? There's so many moving parts in economics. And literally, you are trading the price difference between economics in countries, and they are not in your control. So you just have to get in and get out. As long as you know what not to do, you'll probably survive. That's trading. Yeah, there's no bank or institution on the planet right now that knows what's going to happen next week. All they're doing is they're taking very, very, very small risk, and they are scaling in and moving their prices around. That's all they do. That's all we do. This is taking very large risk and scaling in very quickly and moving price around very fast. Yeah. This is why I'm not holding out an awful lot of hope for this strategy in the long term. But I'm very much enjoying that. Go and test it. Somebody put a set file out yesterday, actually, didn't they? For the where did they put it? In general chat, I think. No, it wasn't in general chat. It was in position trading. No, it wasn't. Where'd that set file go? Oh, there. So Harold put it out. It's in the position trader EA support section called Compound Set File V2. But yeah, the 1 minute strat seems to be nice for the quiet times. Yeah, but this is my point. Yeah, I mean, look at the drawdown this thing's in 8%, and it's got I don't know. You can't even see how many trades it's got on. Where are we? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 trades on that pound odd. The Australian dollar is obviously moving a lot at the moment. So we started getting in down here somewhere, didn't we? But look at this. This is the 24th. So this is only yesterday. This is yesterday lunchtime. And since yesterday lunchtime, it hasn't pulled back far enough. It has pulled back. I mean, there you would have had an exit at break even. There you'd have had probably an exit at break even. There you'd definitely have an exit, probably in a profit. But it's set to 1.5%. It wasn't 1.5%. So therefore it didn't take it. If I was watching it and I was in this many trades, I'd have probably taken it to just get out the thing. But look at it today. Yeah. We've got quite a long way to go to get out of this. But we'll see. Gotta go. Thanks. Yeah. Okay. All right. See you later, Evil. Right. Yeah, I'm off as well. So I've got to get the VPS set up properly with the new set file. I'm going to run the 15-minute version of that. I'm going to do a little bit more testing on it first, and before I get it finalized. But yeah, we'll see how we go with the RSI account, because I've got to do something with it because it's just stuck at the minute, not really going anywhere. So we will see what happens with that over the coming weeks. Just bear in mind today, no news, so I don't expect to have a lot of market movement today. And as I say, RSI's still RSIs and ADRs still flat as a pancake. So hopefully we'll get some movement though. We'll see. But back tomorrow afternoon. Anything you need, I'll be in Discord. Other than that, have a good day, and yeah, good luck with your testing, and I'll see you next time.